While still a few people are entering the room, I suppose with respect to those of you who have been punctual, we shall start. A very good morning, ladies and gentlemen. Good morning, Frankfurt. Good morning to our guests from 10 countries and regions. Today, again, Frankfurt is 1 hour ahead of London, and we want to make the best of it. Let's stay ahead of developments, and you certainly made the right decision today to join us. Ladies and gentlemen, welcome to the 36th Food for Thought event, today in cooperation with the Association of Foreign Banks Germany, our partner ever since we started. The Asian Infrastructure and Investment Bank, AIIB, is our guest today, a multilateral development bank focused on developing in Asia with members from all over the world. By the end of 2020, AIIB had 103 approved members, representing close to 80% of the world population and 65% of the global GDP. Just a month ago, AIIB has pledged it would align itself with the Paris Agreement goals by 2023, whilst 50% of its lending portfolio would be directed to climate-friendly activities by 2025. That's a very ambitious plan. And as we know that most members of AIIB are emerging countries who have huge green funding gaps that need to be covered, that's an ambitious objective. In other words, these countries also want to introduce climate-friendly measures, and they have a big shortage of available funds to finance those projects. Not to mention that many of them are already facing a high level of debt due to the pandemic over the last 2 years. Today, we are very honored to have Mr. Ludger Schuknecht to address the topic, driving this change, the multilateral infrastructure financing in a world of debt. Ludger Schuknecht is Vice President and Corporate Secretary at the AIIB and currently academic visitor to the Lee Kuan Yew School of Public Policy in Singapore. Previously, he was Deputy Secretary General at the OECD and Director General of the G20 Deputy and Chief Economist at the German Federal Ministry of Finance. He also held posts at the European Central Bank, the World Trade Organization, and the International Monetary Fund. He studied in the United States and Germany, and he received his PhD from the Constance University. Dear audience, please feel free to input your question during or after the speech in the QA zone. The PowerPoint slides, and even more than those that we show, will be made available on the website of Frankfurt Main Finance, and we will record the presentation and the discussion, which will also be available from tomorrow onwards on our website. Dear Mr. Schuknecht, the stage is set, it's all yours.
Dear Mr. Fed, thank you very much. Ladies and gentlemen, it's a great pleasure to speak to you today, and I hope we have a good discussion and following my presentation. I want to cover basically two issues. The first one is basically something that is the result of research I've done before I joined the AIIB on debt sustainability and the challenges related to that. And after that appetizer, so to speak, I want to go to the main course, although perhaps it's not quite clear what is the main course and the appetizer, but then I want to go to the question of what are the implications of this for multilateral development banks, the AIIB, and in particular, what is the AIIB doing? Because many of you may not know it very well, and how could the AIIB work with you in Germany or more broadly in Europe? So let me start with the first slide. I'm not sure whether you see it. Yes, there it is. If you can go one further. This slide shows you two curves. The first one, the blue one, is for advanced countries, and the red one is for emerging economies. And the blue one, it shows that, the public debt level in 2020-21 with the pandemic, after the pandemic, in the pandemic, is at 120% of GDP in advanced countries, and actually it's at 140% of GDP in G7 countries. And that is just about the same level as after World War II. And when you compare the two curves, you see that the curve has fallen steadily after World War II till the early 70s, mid 70s. And since then, it has basically known only one direction with a few interruptions of stabilizations. But basically, debt has gone up with every downturn and then only remained stable in good times, so that we are now where we were at the end of World War II. This is not the kind of Keynesian world that Keynes has recommended, of debt going up in bad times and going down in good times. That is much more reflected actually in the curve for emerging economies that you see here, where the downturn of or the debt upswing of the 80s was followed by a decline in the 90s, a further increase and a decline. But in both regions, debt is at record levels. And if you go to the next slide, the next slide shows that, you know, I'm in Asia right now, and I've learned that it's perhaps not a bad idea to kind of put the European and Western perspective a bit in a global context, and to show that perhaps we can learn a lot, especially from Asia. And you can see here on that table on the left, you don't need to look at all the details. Global public debt is at 100%, advanced countries much higher, emerging economies lower. Still, there are some emerging economies like Argentina, Brazil, India, where debt is very high, but in general, it is lower. And that record public debt that we see goes together in many economies with a lot of private debt. And that's shown here in the chart on the right, where you see private debt as the yellow part of these figures, these columns. You see, you know, the far by highest public debt in Japan. And then on top of that, still quite some significant private debt totaling to 400% of GDP. Then you have quite a few big advanced and emerging countries with debt of in the 250% ballpark, which is also unprecedented historically, where, so to speak, the composition is somewhat different across countries. China, less public, more private. Italy, more public, less private. But on the whole, we are in a world with a big sea or ocean of debt. The next slide shows you the dynamics of this debt over the last decades, 2 decades, where total debt globally has gone up, say, from 180%, 70-80% in 99 to 280%, which is households, non-financial corporates and government. So, you know, this steady direction of public debt, it also holds for global private and public debt together. And the challenge that arises from that is clear. With current interest rate levels near zero, this is no big problem, certainly for advanced countries. It's becoming a bit more interesting for some emerging countries now, where we see the first interest rate increases. But in general, the chart on the right here shows the vulnerability of governments to changes in financing costs in the short and in the medium term. So if you are very highly indebted, like Japan, with 250% of GDP, 1% interest increase, even if you only roll over 20% of that, that's 50% of GDP in the case of Japan, leads to an increase in the interest bill of 1.5% of GDP. The number is, of course, much lower for a country with Germany, which has 80%, a little less than 80% of public debt, where it's only then 0.5% of GDP. But over time, this effect is much bigger. Even, you know, 3%, this chart shows an increase of 3% in interest rates, which seems a lot today, but historically has happened actually quite frequently. And so over time, you know, a 3% interest increase means a massive increase in the debt service costs, something we can hardly imagine anymore. But only 20 years ago, the average debt service costs were actually even higher than that. So if you say, take a country with 120% of debt, which is like France, the UK, Canada, you know, a 3% interest cost increase would over time mean a debt service cost of 3.5% of GDP, which is now today more than the average total public investment budget. It's a little less than the public education budget. So this is kind of the vulnerability we have in terms of from the financing cost of high debt. But the further risk is, of course, that, you know, the high debt actually can lead to very high volatility in the financing cost of government and even to loss of market access. And before the global financial crisis, we thought this is only possible for emerging economies and developing economies, this what economists often call a sudden stop. But since, you know, the Greek crisis, we know that sudden stops can also affect advanced countries. And since March 2020, we also know that it can affect even the most liquid market of government debt of all. That's the US Treasury market. So this risk of sudden stops is, to my mind, a real one, and it has affected vulnerable countries already 10 years ago. And then if you look on the next slide, it's only really look on the left two columns. It shows the number of 29, or the share of 29 advanced countries that the IMF has analyzed. And in 2007, 8, 9, in the global financial crisis, the IMF only saw 20% of those governments at risk. Well, you know, several of them then went into crisis. Now the IMF assesses that 80% of these governments are vulnerable. And that includes some of the largest. And on top of this high debt ratios that I've shown you in the beginning, we have additional risks from population aging, financial crisis, the effect of decarbonization, especially if it's poorly done. It can lead to a lot of fiscal costs and a lot of growth loss. If it's well done via market-based mechanisms, it's easier to absorb. But in any case, you know, it's likely to have some effect on growth in the short to medium term. In the long term, it may be positive. And governments at risk, we all know, affect the private financing environment as well. When government financing deteriorates, then often the banking sector financing conditions deteriorate with it. And the MDBs have traditionally been stabilizing forces in all this. They have, especially in emerging and developing countries, you know, if the domestic financial sector dropped out, MDBs have stepped in and have been lending. MDBs, as part of the international financial concert, have also stepped in the global financial crisis to some extent in Greece and in via the European banks, also in the other European countries. And if there were to be future financial turmoil, it is important that this stabilizing role of the MDBs is also still there. Now, this kind of is now the moment where I move over to MDBs and the AIIB. The AIIB, as Bert Svet has said, is a bank focused on infrastructure and related sectors. And I show you on the next slide that the level of infrastructure quality in the advanced countries on the left still tends to be considerably higher than in the emerging and developing Asian countries, which is on the right. So on the right, you see these lines. This graph indicates kind of the middle of the blue field. That's the average. The average in Asia is about 3.5, and the average in advanced countries is over 5. And then you have a big big deviation between the top and the bottom. You see the top is near 6 and the bottom is under 2, and in the advanced countries is much higher. So the indicators have improved in Asia, but there is still a lot of difference. And if you look at the next slide, The next slide shows you the infrastructure, the greenness of our economies in a way, because what this measures is the CO2 emissions per PPP dollar unit of GDP. And that on the left, you can see, has gone down steadily in the advanced countries. Some people claim, you know, there has been little progress with climate protection, but you see here that the CO2 intensity of our GDP has actually about halved in the past 30 years in the advanced countries. And in Asia, the balance is more mixed. There has also been some improvement and also some reduction in the divergence across countries, which you can see from this chart. But the CO2 intensity of the economies has not declined that much, not as much as in the advanced countries. And going to the final slide, on these technical topics, on this more technical topic, in which environment the AIIB and other MDBs are in to master infrastructure deficits, infrastructure gaps, and climate change. Here, this is ICT Access, Information Communication Technology Access, which has, for the last 7 years, which has somewhat improved in advanced countries, which is much more diverse in Asia and also on average on a lower level. So if we want to have better infrastructure, because better infrastructure is correlated with better and more higher value chains, more trade integration, more growth and more capita income, if we want to have more progress with climate change, mitigation and adaptation, and with a technology-enhanced infrastructure via IT, for instance, then we need a lot of investment. And that is where the AIIB in particular comes in, where the AIIB has its focus, even more so than the other traditional MDBs. Now, to introduce the AIIB a bit more to you, on the next slide gives a few basic buzzwords. So it is a multilateral development bank. Unlike World Bank and ADB, the business model of the AIIB is a bit different. ADB and World Bank, Asian Development Bank and World Bank, are geared to use up their capital through subsidized financing, concessional financing, and then do capital increases periodically. Right now, such a pledging and capital raising round is going on. The AIIB from the beginning was designed and defined as a sustainable bank that basically doesn't make a loss. Equal to Asian Development Bank and World Bank, it has multilateral oversight. That means the shareholders, the members, they control the bank. But different to the Asian Development Bank and the World Bank, the Asian Development Bank does not, the Asian Infrastructure Investment Bank does not have a majority in the hands of the advanced countries. The non-regional advanced countries and the regional advanced countries, so that includes the Europeans, Canada, Australia, and Korea. Japan and the US are not members. They hold a little over a quarter of the capital of the bank. China another quarter, and the rest is other Asian members. And this, with the majority rules that the bank has, is giving the two groups not a right to dominate the board, but the right to prevent any major adverse changes through a blocking minority. So it's the first bank in which the Europeans and the advanced countries are not in a majority position, so they have to take a different strategic perspective, and I'm happy to discuss that with you at the end. Also, of course, as any bank, we have high project standards with environmental and social standards and procurement standards, just like the other development banks. So our standards are equally good, and we have the additional flexibility that we can do projects where World Bank and Asian Development Bank standards are applied. So we don't need to duplicate our due diligence and fiduciary diligence. We can apply their standards, which makes project finance, especially cooperation, more efficient. Then I just want to mention the values: lean, clean, and green. To all of this sounds very slogan-like, but especially the lean criterion is important, because it means we don't want to do everything. We deliberately decided not to have big country offices. We deliberately decided not to go through the whole value chain of project preparation, implementation, and control with all the institutional elements in it. It has advantages and disadvantages, but it provides a stronger incentives for us to seek to outsource due diligence to help and induce institution buildings in our partners, so that we have less work ourselves, to say it a bit, to say it in a relaxed manner. Clean, that's the climate focus. Green, that's the climate focus, and clean also means we have high governance standards, no corruption, etc. The bank has 100 billion capital, 20 billion paid in. That is a lot. So it's a very strong bank. It's with a strong balance sheet, AAA rating. But so far the lending volume is 30 billion, because we have only been operating for 5 years. Right now we do about 6, 7, 8 billion, a little bit more during COVID because of a special facility. And that is supposed to increase to lending of about 15 billion per year, so that we will have a balance sheet of maybe 120 plus minus billion by the end of the decade. If you go to the next slide, this gives a bit more detail about our shareholders. 13% AAA, that's Germany, includes Germany as the largest non-regional shareholder with 4.6% of the shares. And then we have 90% BBB minus or better, so 90% investment grade, which also means that as an Asian bank, most of our shareholders have a reasonably good rating. Here you see also the shareholder structure with a little bit of detail. India and Russia being the two largest largest Asian shareholders apart from China. The next slide. I mentioned on the already that we have a unique governance. We have a board of governors and a board of directors. Board of directors is a bit like the supervisory. It's a mixture of a supervisory and a management board. We have only 12 directors, which is about half as much as the World Bank, and I think a little bit less, more than half of the KfW, but there, forgive me if I got it wrong. 3 of them are non-regional. One of these non-regional directors is the Euro area constituency with its director, which is currently Spain, where the first one was by Germany. A big difference is that the board is non-resident. Unlike in the World Bank or the Asian Development Bank, we don't have our board members in Beijing. It has a disadvantage and an advantage. One of the big advantages is that such a board costs about 20 million, which is compared to a cost base that we have currently of 150 to 200 million. That's a huge saving. And the idea of the founding fathers and mothers of the bank was to have the bank, the board more focused on strategic issues, while delegating authority over project decisions, at least, for kind of the standard set of projects, to the president. That's a unique feature of the AIIB as well. In all the other development banks, and I think also in the EIB, the authority lies with the board over all the projects. This delegation model is interesting, but it is incomplete and it is not yet fully implemented. But we have also granted the board then some additional rights which other institutions don't have, like our president is evaluated by the boards. I mentioned that our environmental and social standards can be accepted. We can accept other banks' standards, and the lean processes and staffing I also mentioned. If we can go to the next slide. As Hubertus Fed mentioned, green infrastructure finance is like our first biggest strategic goal in our corporate strategy. Within the next 3-4 years, we want to reach that 50% of our financing is climate related. And by 2030, this would mean a total of $50 billion in climate finance. The second big strategic goal is connectivity and regional cooperation, for which we aim to have 1/4 by 2030. technology-enabled infrastructure that we don't have as a numeric target, but as a strategic target, all the same. You know, that, for instance, I'll come to some projects later, but right now for instance, we have in the pipeline an education, tech-enabled education project in India, where our role is not to build schools or kindergarten, but to foster and finance the digitalization of the school system and the digital infrastructure within schools. So that means that's one of the ways we see tech-enabled. And then private capital mobilization, we have a uniquely high target for private capital mobilization. 50% of our financing approvals by 2030 is aimed to be private financing related capital spending. The next slide, and by the way, that private capital goal is, I think, also something that opens a lot of opportunity for the financing world in Asia and outside. So here's just a little bit more overview of what the AIIB has done. We have so far done 147 projects. I think that was end October. 30 billion is the financing volume so far, not the disbursement, but the approved financing to 31 of our members. India, don't worry about the details here. This is more something for you to look at if you want to look at it in more detail. But the biggest client, it's not a surprise, is India. Then already the next biggest client is multi-country. That's projects that affect several countries. Say if we invest in a fund that finances infrastructure projects in several countries, that's multi-country. Or we do a cross-border road between India and Bangladesh, that's multi-country. So that's already the second biggest project group. And then we have Bangladesh, Turkey, Indonesia, China as the next biggest clients. And if I may then move you to the slide 15. That's kind of like one of the ways we present our project, some nice pictures, plus then some key facts. Bangladesh Tamil Road upgrade. You know, roads is clearly one of the things we do. Then wind, broadband. That's the next two slides. But if you move further to slide 18. Yes, that's like one of our financial projects, which we put under private sector. Is we lend to a Turkish bank that then on lends into SME financing in the infrastructure and other productive sectors in Turkey. Or the next slide has some information on our so-called Lightsmith Climate Resilience Fund, which is a global fund where the AIIB is an anchor investor to have investments into software, data and analytics and companies and tech-enabled products and services companies. This is the kind of financial intermediation that we support, where we often go in as an anchor investor or somebody who produces what financial people often call, I think, a halo effect. That's the next slide, where we go in, say, to ensure that in a fund the ESG standards are fulfilled, the environmental, social and governance. Governance is to a large extent procurement. That we go into a fund, Aberdeen in Singapore is an example, which has 70–80% infrastructure in the region. And we go in and with our money, we, so to speak, commit ourselves to ensure that this fund is only investing in ESG compatible projects that are in line with the ESG standards of the AIIB. So these are some very, very original and sophisticated products by the standards of the region. For Germans or Europeans, this may not be, some of this may be standard, but in the Asia region, in emerging economies and the financial centers that service them, this is partly some very innovative and very original and very development friendly stuff, where you also get a lot of institution building effect. The next slide I was not sure that we have non-German partners on the call, but so if you kind of imagine the word Germany to be, say, European or international, and it's true, all international firms can be partners in project implementation. Here you have a few examples for German partners, and the international financial industry has also lots of scope for involvement, for instance, on the treasury side through working with us on bond issuance, but also on the project financing side, on the financial intermediation side. We have been working with KfW and DG. We have been working especially in Singapore with the financial industry there to support their financial product development, syndication we have done. And so we would be very interested in principle, I should say, with cooperating also with European and international partners, if this then can be linked up to financing projects that fall into the remit of the AIIB's corporate strategy. And this, I should add, is not just Asian countries. We have projects in Africa and in Europe, and especially, so to speak, it can be projects that span regions, that improve connectivity, that help climate. Climate is a global public good. Then, the clients and also the investment countries do not have to be Asians. But I think we are trying, of course, to take advantage of our advanced country, or more advanced country clients, of the more sophisticated products and projects we can do with them. So then we have the question also of government involvement. Again, the word German here could be well replaced by European or advanced country. The shareholder governments should keep a strategic perspective on the bank. This is very important. The Asian Infrastructure and Investment Bank is the only bank, as I said, where European countries, advanced countries, do not have a majority. So you cannot dominate the decision of every project, but you can strongly influence that the governance, the integrity of the governance is intact, and that the bank keeps its multilateral character. And that means we as a bank want that the bank is not instrumentalized, that it maintain its multilateral character, and that the shareholders support our sustainable bank model that gives also a greater responsibility to the management, which to my mind is in particular in the interest of advanced country governments, where they know that if you think about who is going to be more neutral, the management, which is accountable and responsible, and which has only one thing to gain or to lose, and that's its reputation, or the governments themselves, where in this current multilateral environment, there's always the risk of having political considerations entering the board debate. Let me close this with this. There are a few more slides in the presentation, but I leave that to look at for you if you're interested with the circulation. Thank you.
Yes, thank you very much, Mr. Schuknecht. That's been very impressive, a wide roster of activities. I do remember my visit at the AIIB in headquarters in Beijing at the very early days when you were in the setup. So you really got rolling. So congratulations to that. There are a few questions that came in. Let me start with governance. You mentioned a few times the question governance when it comes to approve the loans within the AIIB governance. What role does governments play, and how do you influence governments at the project which you are financing? Is that a big topic? ESG ends with a G, and a lot of people say that governments at the end of the day might be the most important part of it.
Yeah, for many of our, for all of our sovereign projects, the governments are the client governments are our direct financing partners, and sovereign is still the majority. I think it's right now about 70% of our financing volume, or even 75%. And so, yes, having the implementation of appropriate governance standards, procurement standards, but also social and environmental standards is absolutely key. We do a lot of co-financing with World Bank and Asian Development Bank, but also EBRD. I should not forget the EBRD that probably most of you and I didn't have on the radar before. We have excellent cooperation with the EBRD, Central Asia in particular, but now EBRD is also going into Africa. So in these instances, we use their ESG standard, the environmental and social, sometimes also procurement standards. We pay them for it. They're happy for us sharing the risk and the costs. And that's, to my mind, that's the ticket. That's the way to go. That is for our sovereign projects is clear anyway. For our private sector projects, where we finance projects directly, this is also an absolute must. If we finance them jointly, again, we have the option to adopt the standards of the others. And then we have those projects where we are going through financial intermediaries, or where we are co-financing, say, I mean, we are now having in the pipeline, I think it is also on the internet already, a project with the Exim Bank of China, where the idea is, they don't need our money, but we go in so that they have to fulfill our ESG standards in their project financing. And we are forced, for our good reputation, to monitor the implementation. So Chinese state-owned enterprises now use the AIIB to improve their credibility. When I mentioned this first to our shareholders in Europe, they kind of gulped and thought, what's this here? Collusion between SOEs in China and AIIB. But really the story is, the SOEs of Exim has approached us to improve its international reputation. And it might help that they feel a bit more comfortable with us sitting in Beijing around the corner, which are the only people we can actually see right now, being a bit locked up here in China. But they feel more comfortable doing that with us. And but this, I think, is a great progress and a great achievement.
Absolutely. And you mentioned cooperation also with other institutions. I happened to talk to a European Investment Bank last week, and I learned, which I didn't know before, that they developed it together with PBOC, the People's Bank of China, the standards for green bonds. And you also mentioned that you're issuing also climate bonds. Are you in close contact and discussions with the European Investment Bank, with the PBOC on the definitions, and where does AIIB stand in terms of issuing green bonds?
We have been, we are only 5 years old. So we have set our priorities so far kind of mainly in getting kind of a benchmark status and a yield curve in our dollar funding. We have done a bit of other funding in other currencies, in Australian dollar, Canadian dollar, New Zealand dollar. We are now doing a bit of renminbi and ruble funding as local currency counterpart funding for our projects. But there is a vast field for us to develop in terms of local currency financing and then green financing. The green side of it, we have so far done more through our financial intermediation activities. I must admit that I do not know whether we have already issued a green bond on our own. I will inquire after this talk.
I can rest assure you they even exist in RMB and in very many other currencies. I'm not sure about ruble, but RMB I'm very sure about.
Yes.
And the Aussie dollar definitely also.
But this is an area where I'm sure we would be interested to do something with other countries. We do. I know we want to issue in euro. And I mean, this is a field where I think the AIIB would be happy to have work with partners.
Yeah, and you're always very welcome to see us in Frankfurt, and we'll be very happy to support you on that one. COP COP26 has been all over the place, all over the mind. And we all know the dramatic last hours when it came to signing the final agreement on exiting coal. I was wondering, because two of the by far biggest consumers of coal energy are China and India. There are also the two biggest members of AIIB. Are there plans or are there existing facilities, projects in place to finance that exit, that transformation from coal to more renewable energies?
We will definitely be part of that overall effort. And with our commitment to Paris alignment, meaning, you know, the MDB's strategy to assist with our financing in the decarbonization of our economies in line with Paris and national commitments, we will definitely be part of that financing effort. So we have already said we will not finance any coal-related activities. Then there's always a question what that means. We had the other day a project of all places in Russia where we financed electric trains, green project. Then the question came, can these locomotives pull coal wagons? Well, honestly, I mean, our due diligence so far has not gone that far. So I don't think we prohibit that the locomotives that we finance we are interfering with what they carry, but we hope that they don't too much of it at least, and that we don't become part of the pollution problem. But we will have a discussion soon on our energy strategy, which will actually define in a more granular manner in which way we will contribute to the decarbonization through fossil fuel related finance. And here I must say that while even a number of European economies are still heavily dependent on gas, there are some that want to refuse to support any projects that have the word gas as a possibility in them, even like in financial intermediation. So there we are getting to the borders of, to my mind, what kind of restrictions we can impose on ourselves. The Asian Development Bank has just defined its strategy as kind of requiring consistency with national commitments and an exit path out of fossil fuel energy. But we also read that as meaning that, you know, you cannot climb on the tree and kick away the ladder for others. You have to give others a transition chance. If you want to get out of coal, you cannot overnight prohibit gas. Germany has a very ambitious strategy by exiting from several energies at the same time. But for poorer countries, it's tricky. And here we would also hope that reason prevails, and that if you can support us in trying to have a reasonable and flexible approach that still allows us gas financing as a transition strategy, both in terms of energy and in terms of infrastructure. I don't think, if I remember correctly, we don't finance exploration. So that's what we are not in that. But gas we will need to do, because just solar and wind is tricky. And you know that hydro these days is very difficult, very risky with NGOs and CSOs and for governments. So we need to be able to do things apart from renewables in the energy area. And that's why I think we will have a very reasonable approach to energy finance.
Yeah. No, absolutely, and everybody who's seen Asia emerging knows that the hunger for energy is huge, and while it's catching up, of course, the economy will slowly get less dependent on energy, less intensive, but that is not going to happen overnight. That leads me to another question. You mentioned infrastructure, and you mentioned like wind energy and streets and rails and all that. A very new sort of infrastructure is presently under discussion. When it comes to exchanges for carbon credits, issuing of carbon credits. Is that a specific area where you look at it, where somebody in Asia look at it? I would assume Singapore or eventually Hong Kong or Shanghai would be very advanced in that. Can you give us a little bit of a feeling? Is that also part of what you see as a crucial infrastructure for that successful transition?
Definitely, it's a crucial infrastructure, not only carbon credits, but also emissions trading systems. I think the Europeans want to form this emissions tradings club. In COP26 in Glasgow, there was the agreement on the carbon capture, carbon trading, credit trading, and that I think is very important. How concretely we will participate this and support this, we still have to explore. I know in the Singapore emissions trade, Singapore is setting up an emissions trading system, and I would say that the projects that we will do both on the, so to speak, project side and the via financial intermediation will definitely link up with this infrastructure. Whether we are going to be directly involved in it, I doubt that we have the capacity at the moment, but this is something we also now have to take stock and see how we strategically participate in these next steps.
Interesting. In many articles, AIIB published that you want to use more blended finance to go green. Can you explain a little bit what you mean by that, and what's the idea behind?
Yes, I mean, in terms of blended finance, we have internally explored now in the COVID context, where we have used some of the money from a fund, a special fund window, we call it, for buying down the interest rate for some of the poorest countries affected by COVID, and that got COVID loans from us, and where we bought down the interest rates with money from this fund. So that's a kind of blended finance, and we want to create a new facility for concessional financing for these poorest countries, the AIIB countries, that also allows interest rate buy down under the governance of the AIIB. This is to my mind also a kind of a delicacy in the development banking world. It's a delicatessen. What is that? A gourmet, something for the gourmets, because most concessional money is really like bilateral money through multilateral channels without the multilateral governance. So you put money in a trust fund with the World Bank, and then the World Bank spends it on projects, and you exercise a lot of influence on how the money is spent. The AIIB operates differently. We operate through a model where the money goes to the AIIB and then is spent on projects that have to fulfill the regular AIIB standards. And then we can do this interest rate buy down. And then we want to do that also for the poorest countries. This is an approach that we are currently trying to sell to the European governments as an approach that is actually better than the current one. It ensures higher project quality, but less national control. And that's perhaps also why there is less enthusiasm than for the bilateral funding that you control. In addition, we hope, and I think we have done some blending with other agencies. There, I don't know the details, I must admit. I've only started with the AIIB 3 months ago, but my recollection is that we have worked with KfW, DEG, and some other partners on having some blending with our private sector financing. And with, but I must inform myself still better. But there is certainly part of our interest now to have a bit more engagement with national development banks in the future is related also to that. Our access to concessional financing is strictly limited also through our articles of agreements. We can't eat up our capital. So we will need to cooperate with agencies which have more grant money at their disposal and which we can then use for blending.
Mm-hmm. Thank you. Thank you. The next question that came in is infrastructure is the big space where you're active, but you also mentioned that you move into additional sectors like education. One might even consider education also a very crucial infrastructure. I would tend to that view, but also into healthcare. What other sectors are in the making in the future?
It's good that you mentioned education and health, because I mean, we've learned through the pandemic that, even in our advanced countries, the digitalization of our schools, even of our health centers, has not been that advanced. And that to have better tech-enabled infrastructure in these two sectors, which actually doesn't even cost that much money relative to what is spent altogether, is really a priority. And that is an area where I think we can also make a difference in emerging and developing Asia. We cannot build kindergartens or schools. That's not our comparative advantage. But we can also think about, like, say, you build a road, you build a broadband system, then tag onto that the digital infrastructure, tag onto that telemedicine, the connection of the ambulatory health stations in poorer countries. So there is a lot of potential for this tech-enabled infrastructure. Better, more efficient use of train tracks, better road pricing and road traffic management systems, where we see a lot of potential, but where the management challenges are great, where you need a lot of agility and flexibility. If only to start with the deal makers in our own bank who'd rather have a straightforward project, of one type, and rather than to inquire now with the social sector people whether they can add a health dimension to it. So there is a lot of practical complications, but we are small, we are nimble, and so we hopefully can contribute through that tech-enabled infrastructure, make a difference. We will have to take a decision on where we see our priorities in the climate change area. Energy production, we do some renewable financing. Energy is an important part. We have done some energy infrastructure financing, but how we want to participate in that storage and energy transformation space, which is gigantic, we also still have to take the corresponding strategic decisions and see what we can do with our comparative advantage.
Very, very interesting. And you're absolutely right. I mean, this is not a source of pride, the way we technologically handled the pandemic. I only last night had the privilege to talk to a visitor from an Asian country that told me that while she was under quarantine, she moved within the house between different rooms and got an alert that she was not supposed to do that, and that shows what technology could have done in preventing the spread of the disease. Of course, given with all the features and the restrictions in terms of data protection, but I think clearly Asia is more willing to use technology for health for other purposes, and I think there will be in a space eventually where one day in not too distant future Europe would have a lot to learn. And that leads me to the final question, because we're running out of time. We've got just 5 more minutes. The pandemic and the results of the pandemic. I think what we are, particularly in Germany, we are very privileged to serve as a fantastic social system that basically buffered a lot of the effects. But I do know, and I'm fully aware, that in Asia you did have at least 100, if not 200 people who were pushed back into poverty because of the pandemic. And that's something in the entire discussion very often lost on a lot of people. Is there any particular program on that one? The question A. And the last one and the closing one, when finally, do you think China is going to open up and we can travel again? Is there any foreseeable date? Is there anything on the line? Is 2022 the year to hope for, or do you foresee it might eventually take even longer?
Yeah, that's let me start with this first question. That's the easier one. The AIIB, just like the other major development banks, we have done special COVID relief programs. Ours is called COVID Relief Facility, to provide lending to countries to buy vaccines, and we call it policy-based lending. So we provided money for them to undertake certain programs to alleviate the effect of the pandemic. We've lent out 10 billion under that facility in the last 1.5 years. Quick decision, quick disbursement. 10 billion. I think that was the bulk, no, not the bulk, but the majority of our lending over this period. 10 out of 30, so 1/3. The World Bank, the ADB have done much more than that. I don't know whether the World Bank has done 50 billion or something. But certainly much more than us. But altogether, I think that was not an insignificant contribution, all the more as it was well targeted, well implemented. The best contribution the countries can do to alleviate the COVID-related poverty is, of course, to get their people vaccinated, and then to introduce the right framework conditions for these economies, private sectors to develop. And then we come in with the infrastructure related lending, which is actually, one has to be realistic, also only a small fraction of the infrastructure related finance that is happening in Asia. But if we can focus that money on activities that build new markets, that help institution buildings, that help draw poorer countries in, so to speak, the B lenders become A lenders and the B countries becoming A countries. That's our contribution. Not whether we finance 2 or 3% of the total infrastructure. I think the institution building side, the standard dissemination side, that's our greatest value and contribution. And for poverty reduction in these countries, in the end as well. I now just have to think of one of our satellite projects in Indonesia, private sector project, where a big private company in Indonesia satellite technology is where this project has allowed the inclusion of, I think, millions of people in Indonesia into the telecom infrastructure through satellites, because they have all these remote islands, and even on the islands, remote areas. So that one needs a holistic approach for poverty reduction. And during COVID, we saw a significant decline in infrastructure finance. That is now normalizing. Now everywhere in the world, we now have capacity issues. So we cannot expect that when infrastructure production declines by 50%, that then the next 2 years it can increase by 50%, because the capacity has been idle for that period and not so much additional capacity is there. But if from now on we can use can go back to normal and do our full program, I think that is a good contribution. 1 minute on China opening. The Chinese have a different philosophy. In Singapore, it was called Tie. I think in China, Si is Se. It means the fear of death. It's a concept where one could also, in economic terms, translate it into high risk aversion. And the Chinese have been very successful internally to limit the implications of COVID. We move around very freely inside, but it has had very high costs internationally. And for those people kind of in between the two worlds, it's been pretty awful. So in March, there's a big party congress. There's the Olympic Games in February. Nothing will happen before that. Then there's a window for some opening, especially if this new COVID medicines work and the vaccines spread. Here, I think almost 100% are vaccinated, but they'll probably also need their third booster soon. And then we have another party congress in October. So if the spring window is missed, then it'll be hopefully the winter 22-23 window when there is enough experience elsewhere how to keep things under control. And if you ask me what is my baseline scenario, that is my baseline scenario. In between, people can travel, but it is costly and risky. I hope that some of the most gregarious crazinesses that happen, are coming to an end earlier. But on the whole, I would say that this is to be the expected scenario, and I think we can live with it for another year if the perspective is that then things will open. For us as a bank, it'll be difficult. We'll have to see how we keep business open on the ground with people having difficulties to travel. We want to have a meeting of our board in Europe in next summer. So we want to signal to our members that we expect normalization. Unlike in the rest of the world where travel starts normalizing now, I think we'll need a bit more time.
Mm-hmm. And like you rightly said, the strategy paid off very well, and we keep the fingers crossed that continues the pace and hopefully enable all those. I do know of many people from China living and working in Frankfurt and in other parts of Europe that do want to see their relatives again. For them, it's certainly a major restriction in their personal movements. So thank you very, very much, Dr. Schuknecht. It was a great privilege, great honor, and very, very interesting to have you today here. Let's keep the lines open. Let's continue the discussion. I think AIIB done excellent, terrific job, and your focus on really on institutional building, on governance, and spreading that is a very wise strategy. So keep continuing with that. We will follow with great interest, and do hope to see you in Frankfurt in person very soon again. Thank you so much.
Thank you, and we are open for business, and we hope to work together with our European and German partners in the future.
Excellent. With that, all the best to Beijing.